A liquidity zone is a specific area on a price chart where the market orders concentrate. In this video, I will teach you how to identify the most significant liquidity zones on gold chart beyond historical levels. And watch carefully, because at the end of this video, I will explain how to apply these zones for trading and forecasting gold. Take notes and let's get started. First, in brief, let's discuss where the market liquidity concentrates. Liquidity may concentrate on psychological levels. For example, here we have 2500 level. It is a very significant psychological level based on round numbers. And analyzing the reaction of the market to that level in the past, we can easily spot that it definitely attracted the market liquidity, and the zone, the area based on that level was important for the market participants in the past. Fibonacci levels may attract the market liquidity as well. For example, here we can spot a significant liquidity zone based on 618 retracement of this recent strong bullish impulse, and we can spot that in the past multiple times significant bullish movements initiated from that liquidity zone. Liquidity zones based on the trend lines may also concentrate the market liquidity. We can spot that this rising trend line on gold was very important for the market participants in the past, and we can spot that many times the market stopped growing once that trend line was reached, and from that trend line we saw significant bearish movements. Classic support and resistance levels may also concentrate the market liquidity. For example, here we have a very nice liquidity zone based on a key horizontal resistance that was broken and that turned into support after the breakout, and we can see how nicely it was respected and how nicely the market started a new bullish wave from that. A significant liquidity zone will be the area on a price chart where different types of liquidity zones match. For example, it will be the area where the psychological levels, the Fibonacci levels, the trend lines match in one single zone. Look at this significant liquidity zone on gold chart on a daily. This zone is based on the psychological level on 2000 level. This zone is also based on 382 retracement of a major bullish impulse, and that zone is also based on support and resistance levels. And all that gives us a perfect confluence zone, the zone where different liquidity zones match. And such zones can be easily found even beyond historical levels. Gold has recently updated the all-time high, and we see a strong bullish continuation now. Let's try to identify the next significant liquidity zone, and let's try to predict from where the next bearish movement may start. In order to do that, first let's analyze the psychological levels. Let's try to find some important psychological level beyond the historical levels. The important level that I see is 2600 level. It is the level based on round numbers, and definitely we should pay close attention to that level. Then we should look for something else, and when the market is trading above the historical levels, try to identify a significant trend line. If we zoom out the chart, I can show you one significant trend line that I'm paying close attention to. If we take the high of April 2023, we can spot that we have a very important rising trend line here. Why that trend line is so important? Because that trend line was respected by the market 3 times in a row already. We saw significant bearish movements from that trend line, and we may expect that in future the liquidity will concentrate on that trend line. And we will also execute the Fibonacci analysis. We will execute the Fibonacci extension analysis, and we'll look for some confluence. Traders, watch how I trade gold live in my trading academy. For more info, check the link in the description below. The first bullish impulse that I see that we will analyze from the Fibonacci extension perspective is this bullish impulse. Very nice bullish movement here, and based on that impulse, we will draw a Fibonacci extension from low to high. We draw the Fibonacci extension levels, and here we have 1272, 1414, and 1618. And we will also take one more impulse, and I see a very nice bullish impulse right here, this one. We will draw the Fibonacci extension levels based on that impulse from low to high, and look what we have here. We have our psychological level 2600 level, and we have a very perfect confluence here with two Fibonacci extension levels. Also, we have our trend line. The trend line and this confluence level will give us a very perfect expanding liquidity zone. That will be our liquidity zone. That will be the area where presumably the selling orders will concentrate. And why that zone is so important for us? Because from the supply and demand perspective, now the demand exceeds supply, and for that reason the market keeps growing. And within that zone, we will assume that a lot of selling orders will be placed. And when the market will reach that zone, we will assume that the excess of demand will be finally absorbed by the supply. And first, the market should stop. Then the market will stop within that area. And then if the supply will be strong enough, we will see a correctional movement from that zone. The liquidity zone that we identified is very significant. It can be the next potentially strong resistance on gold chart, and it can be the area from where the next strong bearish movement will initiate. Learn to recognize these zones because it will help you a lot in predicting gold price movements. Let me know, traders, in the comment section if you have any questions. Also, traders, if you want to learn how to trade gold, if you want to see how I trade gold live, do not forget to join my trading academy. For more info, check the link in the description below. Also, traders, do not forget to watch my other videos.